Is your life insurance advisor discussing the new kind of insurance with you? Karen Orzer is back with us for another coffee break to explain details. Karen, welcome back.
Thanks, Sybil. It's nice to be back.
So Karen, what is the difference between the old kind of life insurance and the new kind?
Well, years ago, I call it like the insurance our grandparents all had. You know, they went and got a mortgage, or they went and got their first business loan, and the bank tacked on that life insurance. And that's great. It's good to have. But nowadays, the new kind will pay if you die, or it'll pay if you get sick with one of 25 illnesses, the major three being cancer, heart attack, and stroke. And what's happening today is that we're surviving illnesses that before we weren't, because medical advances have come so far in the last 30, 40 years. We're not claiming on life insurance like we used to. So now somebody's getting diagnosed, chances are surviving, and they really need a little bit of extra cash to pay for whatever they need.
Absolutely.
So sometimes
I think about when people get sick, they're unable to work, but their bills still keep coming in, or maybe a loved one is sick and then you need to take time off to help take care of them. And where do you get the money? I mean, life insurance pays out when you're dead, but I think what you're saying is, but what if you're sick and you need some money and you're still alive, which is a good thing? That's when this new type of insurance pays out.
Yeah, and a lot of times people have disability through work, or they say, you know, we live in Canada, lots is paid for. Absolutely, lots is paid for, but lots isn't. And you know, there's so many things you can do with that money. And the way it works is, you know, if you get sick, you can either set up, you know, 2 years of mortgage payments. You can set up some time so your spouse can get time off work, because they can't claim on their disability if they're taking you for treatments or so on and so forth. You can do whatever you want. Maybe you go on that holiday that you and the family have never done, that you always dreamed about because you're going through something pretty big. And I've heard that if you're less stressed, you're more likely to recover. And I know that money doesn't take cancer away, but it does take away a lot of stress. People are also more likely to spend that money when it's the insurance company's money, whereas they wouldn't spend that money if it was in a TFSA or RSP. But if the insurance company mails them a check, they're more likely to just take that stress away, make their life a little bit more comfortable while they're dealing with all this.
Well, this sounds worthwhile looking into. Where can people go to get a little bit more information on how this works?
So there's lots of resources on there. Critical illness. One of my all-time favorite videos is actually done by Dr. Mars Barnard, who was the person who invented the product. So it's the only product in Canada that was not developed by an insurance company. This product was invented by a doctor, and that means he saw the need with his patients. There's a great YouTube video. We're going to post the link and take a look at it. I think it'll give you a pretty good eye-opening on really what people are dealing with today.
Great. Thanks, Karen. And viewers, thanks for joining us on our coffee break. And don't forget to check out more of this type of information on thewealthylife.com.